Hello, everybody. My guest today is Adam Robinson. He's the co-founder and CEO of Hireology, a venture-backed hiring and talent management platform named a top 50 best workplace by Inc., a top company culture by Entrepreneur, and number 94 in 2016 and number 332 in 27 on the Inc. 500 list of America's fastest growing private companies. Adam, are you ready to take us to the top?
Let's do it.
All right, very good. So update us real quick, because I know when you obviously apply for Inc., you have to report things like revenue figure. Where were you in 2016 and 2017?
We were just a shade under 17 million of GAAP revenue in 17 and just under 9 in 2016.
That's great. Okay, so now tell us what the platform, that's a big old hook right there. So now tell us what the platform does for people that aren't familiar.
Yeah, we're everything that an owner-operated business needs to be good at the people side of their business. So we focus our talent technology platform on branded business networks like dealer networks and franchise systems. So over the last 4 years, we've grown in specialty markets like automotive retail. 1 in 9 new car dealerships in the United States run Hireology to build and keep their teams. We're in over 130 franchise brands and 5,000 owned and operated locations individually that are part of some branded network. And that nuance really matters in our value proposition.
Yeah, so 130, we can think of the 130 almost like logos, and that's across 5,000 locations of those logos. Is that accurate?
That's correct.
Okay. And how do you price? Do you price based off logo or per location?
We price per location per month based on employee count at that location.
Interesting. And that's obviously, knowing how to price and what to tie your utility value to is a tricky thing to figure out sometimes. How did you come to that kind of being your equation?
That's the question. We started our business in 2010 and we were a job slotting model. So you could buy a one job opening subscription to Hireology and it'd be the platform for what you need on demand. So we were selling to the market we had access to, which is small businesses that didn't have a lot of resources or anyone selling to them, right? And so we've grown from there. Now what we find is as we've expanded the platform and the breadth, our value prop is really based on servicing the number of employees that you have. So if you're trying to maintain headcount of 50 employees, that means you're running a certain size career site, you're running a certain number of job ads and marketing spend, you're running a certain number of interviews, tests, assessments, drug and background screens, and we price based on your revenue, your employee footprint, and that drives our revenue and pricing.
Interesting. So if we look at it on the 5,000 number, the location number, not the logo number, on average, what's a location paying you per month, would you say?
Really depends on the industry. Blended, you're looking at about $250 to $300 a month.
Okay, so that's a tricky price. Well, maybe not, but a lot of people that are in that like $100 to $300 ARPU range, it's tricky because it's usually not enough to put touch on the sale, right? But it's also not cheap enough where the sales will be no touch on the website, right? You have to put something on it. So how do you manage that balance?
Well, what you would find digging in is that the average owner in some of our largest markets own 4 to 6 locations, so that location ARPU of $300 really is more like $1,500 to $2,000. I
see. Yeah. So you're still selling bulk deals, right? But per location, it's the $300.
And what's different in our markets, and the reason why it's tough to get into this space, is because those 4 locations are typically operated as 4 independent LLCs with 4 different ownership structures.
Wow.
Maybe owned by a common holding company, but the ownership structure is different. So if you're a traditional HR tech company selling to a centralized HR team at corporate, that doesn't exist in our customer base. They're decentralized networks, different ownership structures, and requires a completely different tech stack to pull it off.
That's interesting. It seems like you're pulling it off. 5,000 locations, $300 a location puts you at about 1.5 million a month today. Is that generally accurate?
We're actually a little bit north of there.
Okay, good.
So we're running close to 1.7.
That's great. When do you think you'll pass 2?
Third quarter.
Oh, great. That's great. And that would then put you at, what is that, a 20 million run rate coming out of this year, something like that?
20 now, 27 at the end.
Yeah, good. That's good growth. How do you kind of forecast what growth targets you want to hit? Like, how do you know that you want to go for 27 after doing a 17 year?
Oh, we look at our addressable market and, we look at what's possible. And then we look at what's our maximum efficiency to get at our maximum growth rate. So we don't want to blow it out have our acquisition costs go off the charts, have our LTV to CAC ratio crater. It's just not worth it. So we're trying to build the best business we could build, which is the right amount of hyper growth, right? There's a point beyond which it's just not worth getting that incremental customer because you have to pay too much. It's just inefficient. So I think we're proud of our capital efficiency and the way we approach this.
Tell me more about that, and maybe let's approach it from a payback period number. How quickly do you like to get paid back on your CAC?
Generally, we love 10 to 11 month paybacks. And if we're fully loading in customer success and support, sometimes we do it, sometimes we don't. Depends on the analysis we're running. That'll stretch it a little longer. But on core sales cost, we're inside of 11 months most of the time.
That's good. So kind of backing the math out of that, you're spending somewhere between $3,000 and $5,000 to get a new location.
That's correct.
Yeah, that makes a lot of sense. Where is the spend most effective for you, to the extent you can share?
When we can get in front of prospects, that's the most effective. So we do a lot of old school. It is thought leadership publishing. I've published a book. We crank
What's it called?
It's called The Best Team Wins, Build Your Business Through Predictive Hiring, which has really had a huge impact on our business. And yeah, I mean, we're showing up instead of being paying to speak, we're being paid to speak. It really makes a difference. We're seen as a thought leader in our markets. We really get to know our industries and our verticals. And so it's made a difference. So when we can show up and there's 400 people in a room that could all buy from us, we go out with 40 or 50 customers. That's a good use of time. It's
a great use of time. Walk me through funding, right? So I don't think you're bootstrapped. How much have you raised, and why did you make the decision to raise it all?
Yeah, we've raised somewhere in the neighborhood of about $31 million to date. That's come in 3 different rounds, A, B, and C. Most recently, at the beginning of this year, and we did it because we saw a market opportunity, and there's a window on that market opportunity that closes, and we frankly thought we could execute this strategy. Win these markets and return capital to shareholders in a way that make them pretty happy. And so we saw the opening and went for it.
Yeah, it's fascinating to me, Adam, how many sound companies there are in this exact space. Like we had the iCIMS folk. Colin was on recently. He's cranking well north of 100 million. Obviously, bootstrap, just killing it. Moved into a new office. You got Gusto. You got Zenefits was just on. How is there so much space for all of you?
Well, a problem, by the way, and iCIMS is just a world-class organization, and Colin's killing it. I mean, it's just, you're going to aspire to be as well-run $100 million business as that one. But it's a universal problem, and it's a persistent problem. Companies are really bad at the people side of their business. And as the economy expands, the workforce expands, the problem expands, the number of companies created we'll always have this issue. Big companies have this problem. Small companies have this problem. The problem's never going away. And so it's all businesses with employees have this issue. That's a big market. I mean, it is tens of billions of dollars of opportunity just in the United States.
Yep. Are you playing it all? I don't know if it was Jay or Colin, Jay at Zenefits or Colin at iCIMS, that said that they were just now expanding product line into the kind of job recruiting ad spend market, which I guess people spend $15 billion on recruitment related ads annually. Do you have any products to hit that space or no?
Yeah, it's just so interesting. I mean, some of who I'd consider thought leaders in this space all are coming to market at the same time, realizing the same thing, that our companies not only are bad at hiring, they're bad at advertising their opportunities. Yeah. I mean, they just light the world on fire with their money. And we have a product we call Applicant Engine. We launched in January. We've been in the market for 6 months with that product. We think it's bigger than our core market. I mean, I think a lot of the smart players see it and are going at it.
Yeah.
And that is, traditionally you'd spray your money around a bunch of job boards and hope you get some applicants. Now it's really more, companies like TMP have operated in this space. That own Monster with a traditional agency model. I'll help you spend your ad money. Programmatic is going to own that market in 5 years, and it's companies like ours and iCIMS and others that are going to help customers do that.
That's right,
and that can happen at all segments of the market, enterprise and large midsize where iCIMS plays, and down to small midsize and small business where we play.
Yep. Churn. What are you at?
90+% net revenue retention annually. In our markets, that's pretty good.
At your price point, you're not selling huge $250,000 annual maybe some are, but it's not your kind of your key sale. Can you get to net negative kind of, or should I say over 100% net revenue retention annually at this price point?
Yes. And in fact, we expect to do that by the end of next year.
And what will be the main growth driver of that? How will you get there?
It's going to be new products. So we think hard about how we configure our product bundle. We want to go in with what we'll call an essentials package and upsell over time. So what we've learned over the years is even if we have the opportunity to sell a customer everything, we probably shouldn't, because they're going to churn if they're paying for stuff they don't use or see the value. And so there's a lot of excitement at the front end. We're generally the first HR tech in the door, so we can sell them more than they need, or we can sell them everything they think they want to buy. We've been very good at pulling the deal sizes down and upselling over time, which is a trade-off, but it pays for itself in churn and revenue expansion. You've got a much more sustainable business.
And what do you assume lifetime value is on these folks?
We measure that, both at 3, 4, and 5 years generally to run our scenario planning.
Interesting. Yeah, the LTV number is always a tricky one to actually use when you're making strategic decisions, because it can change and fluctuate. But if you assume 3-year minimum at $300 a month, that's $12,000 there in lifetime value minimum. Yeah,
I mean, and the thing we think about in our senior leadership discussions is let's not worry so much about these theoretical SaaS metrics. Lifetime value could theoretically be infinity if we do our job. And so let's focus on building great product, delivering great value, servicing customers, and keeping them on the platform. And lifetime value is going to be what it is. Longer is better than shorter. So let's not, navel gaze and be theoretical.
I like that. I love navel gaze. Has not heard that term before, but I assume that means you're looking straight down, looking at the short term the whole time, right?
Well, looking at your, just kind of picking the lint out of your belly button, trying, thinking about problems, and meanwhile, the thing's on fire right in front of you, and you're not even seeing it.
Yeah. So, what's your team size today?
We are 170 today. We see an opportunity in a window in what, everybody thinks is pretty late stage of the economic expansion, but everybody's been saying that for the last 3 years. And so we have the opportunity and the capital to really push it and lock up some market. And so, we're in the middle of a pretty big hiring push.
That's great. And where's the team based?
We are in Chicago, Illinois. I've got a bunch of reps in the field that are home-based around the country. And then our engineering team is 100% home-based and remote throughout the United States.
Oh, that's great. So Chicago and remote locations. Very good, Adam. Let's wrap up here with the famous 5. Number 1, besides your own, what's your favorite business book?
My favorite business book changed last year. It's Shoe Dog by Phil Knight.
And what was it before that?
Business favorite before that, I was a big fan of 7 Habits. That is a book that's had a big impact on me.
2 good ones. Number 2, is there a CEO you're currently following or studying?
CEO I'm currently following or studying. The short answer is not one that pops to the top of mind here. I spend a lot of time reading latest and greatest market intel, business every day. I mean, I'll read 4 or 5 newspapers a day. Electronic, some actual paper versions of newspapers, I'll admit.
Good. I like the traditional side. That's good. Number 3, Adam, what's your favorite online tool for building a business?
Favorite online tool for building our business? Well, I'll tell you the tool that's most important to our success is Salesforce.
Yep. Number 4, how many hours of sleep do you get every night?
5.5 to 6.
Okay, that's pretty. Okay, you're skimping there a little bit. What's your situation? Married, single, kids?
Married, 4 children.
That's why.
9 and under. Our 1-year-old got up last night, decided she wanted to party at about 3:00. So I'm a little groggy right now. But yeah,
that explains the 5-6 hours. And how old are you, Adam?
Turned 42 on Saturday.
Exciting. Very good. Last question. What do you wish your 20-year-old self knew?
Take more risk sooner, because it's a lot easier to bounce back then. So I wish I would have pushed it all. Things that were a big deal just weren't.
Yep.
They just weren't. I just pushed it harder, and I'd be a lot farther.
Guys, there you have it. Take earlier risks. Take bigger risks earlier in your life. If you're listening right now, you're under 30, go for it. Stop sitting around. Adam launched Hireology back in 2010. He's now helping over 5,000 locations across 130 different brands really, again, hire more effectively, onboard more effectively, and just bring a lot of waste and pull a lot of waste out of the hiring and recruiting process. They're growing rapidly. 2016, 9 million, 2017 scaled to 17. Today, they're at about 1.7 million bucks a month in revenue, hoping to go up to 27 million in terms of run rate by the end of 2018. Currently 90% net revenue retention annually. They're spending, $3 to $5 grand to acquire these customers, targeting 11 to 12 month payback period. 170 people between Chicago and other remote locations around the US. Adam, thank you for taking us to the top.
Thanks for having us back.